Hey, what's up guys, welcome back to the channel. In today's video we're going to be doing a short and sweet technical and fundamental analysis of one of the most unique electric car stocks out there called Fisker, trading under the ticker symbol FSR, to get an idea for when this stock can start to rebound. We'll also be looking at some long-term price targets for this company if they are successful in mass producing their main electric SUV, which is called the Fisker Ocean. And at the end of the video we'll also look at the stock chart to do some price predictions for the very short term. But before we get into it guys, make sure to drop me a thumbs up and hit that red subscribe button if you haven't already. So let's start off by quickly understanding what exactly Fisker does and what kind of backing they really have. If you didn't know, Fisker actually used to be one of the first EV automakers back in 2008, right alongside Tesla, where they were developing the Fisker Karma, which was another performance sports car. They sold around 1,800 units of that car until 2013, which is when Fisker had to unfortunately file for bankruptcy after their main battery supplier, A123 Systems, went under because of some huge battery cell defects. And since then, the brand really did nothing until 2016, which is when Henrik Fisker, the founder of the original company, decided to basically revive the idea by starting up Fisker Incorporated with his wife. And as you can see now, these guys are basically starting from scratch by targeting the mid-size electric SUV market with their Fisker Ocean. This Fisker Ocean, which is not in production yet, is expected to start at a price tag of around $37,000 with some pretty reasonable leasing options, for which they have around 15,000 reservations already. But the real issue behind the curtain here is that the early production for this car isn't expected to begin until Q4 of 2022, which essentially means that the Ocean isn't going to be on US roads until at least 2023. And this paired with the fact that there's already a lot of competition in this premium EV space from the likes of Tesla, Volvo, and even Ford, makes the future profit margins for a company like Fisker look much dimmer than say Lucid or Rivian, which are starting production this year. And I truly think this is one of the main reasons for why this stock has been underperforming and doing so poorly over the past 9 months or so. It's the fact that investors want true validation of Fisker's manufacturing ability and its ability to satisfy customers when the Ocean is on the road. But I do think personally that if they're able to mass produce this vehicle successfully, then this thing can definitely sell like hotcakes because of not only the super attractive pricing, but also the amazing design of this car. I mean, just look at this thing. It's one of the most elegant and eye-catching designs I've ever seen on a car. And since a lot of sustainable materials are actually used in the construction of this vehicle, I do think that the environmentally conscious people are definitely going to be first in line to pre-order a vehicle like this. But now obviously the big elephant in the room is how exactly will Fisker be able to bring an SUV like this to market if they don't have any factory or manufacturing ability themselves right now. And this is exactly where their Magna and Foxconn partnerships come into play. From the research I've done, Magna International is one of the largest auto parts suppliers globally and actually has a 7% stake in Fisker stock. And just in June of this year, these guys actually signed a manufacturing agreement where Fisker would essentially be able to use their factory in Austria for building the Ocean SUV late next year. And the most interesting thing here is that Magna will actually be able to give Fisker any technology platforms that they might be developing in-house, like sensors, autonomous software, and radar technology. This binding agreement also actually means that Magna is going to be sharing their advanced driver assistance system for the Ocean SUV to use, which obviously gives a very nice validation for Fisker's prospective customers next year. Now the key thing to mention is that this isn't going to be anything close to full autonomous driving, which is why I still think that Fisker is still going to struggle with their profit margins, but this whole Magna partnership is definitely a step in the right direction as these guys are obviously going to market next year. And as an honorable mention, Fisker actually also has a strategic partnership with Foxconn, which is one of the world's most popular electronic suppliers. And as we've seen over the past year, the chip shortage means that every single automaker is struggling with finding the right parts to make their cars. And as a result, this shortage would be a very big blow to a startup company like Fisker, which is why this sourcing agreement with Foxconn is very, very good news. But one of the main issues here is that Foxconn does not actually have any real stake in Fisker's stock, and it's mostly going to be a profit per car type compensation plan for Foxconn. So essentially Foxconn is going to help Fisker to bring the Ocean SUV and the Peer project cars to market, but they might actually end up cutting ties or eating too much of Fisker's profit if the Ocean doesn't end up doing extremely well. So in my opinion, Fisker is definitely a very strong investment opportunity for those who want to play the stock for the next 12 to 20 months, but it might get very tricky once Fisker plans to scale their manufacturing for the Ocean. Because obviously after they started the early production, they'll have to raise more money, and Magna might end up trimming their stake in the company by selling shares. And like I said before, there's a lot of competition in this mid-range electric SUV market coming up in the next year or so. So if there's any small setbacks in Fisker's launch plan for the Ocean, it could really spook Wall Street and be a bad thing for the stock. So now that we've had a look at the business and done a little bit of a fundamental analysis on Fisker's business model, let's have a quick look at the stock chart to get an idea of where exactly we could be seeing some nice buying opportunities if you are looking to invest in the stock, and what exactly is in store for this company in the very short term. As you can see, this stock was actually one of the very first SPACs that went public last year in 2020 back in the summer, which is why this stock has been so freaking volatile for the past 12 months. Just a year ago, we were sitting at around $8 and squeezed all the way around to $32 after the Magna and the Foxconn partnerships were being announced. And as you can see, since then, we've sold off really aggressively. We ended up hitting the same lows we hit last year at around $9. Then we rallied again from May to June. And since then, we've sold off continuously again back to this $13 region. And as you can see, now we are below both the 200-day and the 50-day moving averages, which obviously is not a good sign for short-term swing traders. But in my opinion, again, as a long-term investor, you should always be happy if your stock price is coming down, because it gives you the opportunity to dollar cost average down and build a stronger position. And I think one of the other reasons for why this stock has been performing so poorly is because, generally speaking, growth stocks, EV stocks, and also SPAC stocks have been doing really poorly ever since February of this year. And that's primarily because of inflation issues and obviously growth potentially slowing down over the next year or so as the economy reopens. And as a result, I would not get too concerned about any short-term price action, because at the end of the day, the market is influenced by a lot of different factors aside from the pure fundamentals of the business. As you can see on the MACD, we're still on a very strong downturn in the short term because we are below that zero line, and obviously we are not seeing any sort of consolidation for an upside move yet. As you can see, we're kind of forming this double bottom in the short term right now, from which if we break down to the downside, I see a very nice buying opportunity sitting around that $12.20 region. And obviously if you get below that region, I think we could definitely sell off very aggressively to this $9.98 region, which is right around where we ended up finding support just last year. As a result, I would look for entry opportunities around these specific levels if we don't end up holding this double bottom. But obviously if we end up bouncing from this double bottom, I would look for a confirmation for an entry if we break above this $14.50 region. Because as we all know, double bottoms are very strong reversal signals, and they are often confirmed when the high of the double bottom is broken, which in this case is right around this level. And as you can see, just last month, FSR made a huge move from around $15 all the way to $18 after that huge price target upgrade they got from Morgan Stanley. And I think analysts also see something pretty unique with a company like this, which is why some of the price targets for this company are well in the $20+ range. If we also have a look at the Bollinger Bands on the daily time frame, you can see we're starting to compress really tightly over the past few weeks, which tells me that we could be seeing a potential move to either the upside or the downside in the very short term. And as we all know, retail interest is definitely very high on a company like this, which is why the moves to both the upside and the downside are always exaggerated. And as you can see, that 20-day moving average in blue right here is also acting as a pretty strong resistance. So as a result, if we end up breaking above this high of $14.50, I see a very nice move coming to at least around $17 to fill this gap up here. And obviously, I would also expect the Bollinger Bands to start expanding all the way up here to around the $16 to $70 region as well, which again would act as a very nice price target to start taking some profits. But overall, just looking at the chart, the risk to reward is really attractive on the stock, with very minimal downside in the short term and quite a lot of technical upside in the long term, because obviously this is a startup company and they're trading at a very cheap valuation compared to what other electric car manufacturers are. But anyways guys, make sure to drop me a thumbs up if you found some value from this video. Overall, I think FSR is a very good high risk, high reward EV play. I personally do not have a position in the stock. However, I am day trading and swing trading the stock when the opportunities arise. And as usual, make sure to do your own due diligence and research. But anyways guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.